Good morning. This is Tom Alexander. It is Sunday, September 8th. It is 10:40 a.m. Eastern Time in beautiful Charleston, South Carolina. This is the weekend update I do for the U.S. stock indices. I do it weekly. It is free. If you're receiving this for the first time, let me show you. You can go back and you can look. You can go to my website, alexandertrading.com. There is a title bar up here. Click on weekly update. These are free. This is this weekend's. You can click on it. You can see all the charts that I'm going to discuss. And in many cases, more charts than I have up here. And again, it's free. You can go back and you can look at previous updates. You can download a PDF, etc. Okay, let's talk about the markets. Also, it would be a big help if you find value in this, if you would like and subscribe. Happy to respond to comments. Okay, as far as the U.S. indices are concerned, let's just go through each primary U.S. index that we follow. Now, the big question is, where are we? Are we in a bear market or a bull market? And as most of you know that have followed me for a while, it really doesn't matter. What you're trying to identify as a trader is opportunity in a given time frame. So my time frames are, I do day trade, but that's a very, very different animal than swing trading. So let's talk about, this is primarily about swing trading, this video, okay? Swing trading, intermediate term type of thing. So last week we talked about this balance area that formed. If you can visualize the market profile, this Gaussian shape here. Let me see if I have a profile view up. Yeah, I'll show you. So let's go. So if we combine these 10 days into one profile unit, you can see how mature it was coming out. And then we broke on Monday to the downside very sharply. We were looking for a break. We were sort of pushing all-time highs. I personally thought we were going to break to the upside. We didn't. We broke to the downside, but the signs were very, very clear. Also put in the report last weekend that breadth had to expand if we were going to break up. And if it didn't, we were in trouble. And that's exactly what happened. So where are we now? Well, we had a wide range day with a lot of conviction in all four of the indices on Friday. And it's important that it was all four of the primary indices. So actually all five, if you count the New York Composite, which I like to do. So this is a wide range day with a lot of conviction. Where is the next level of potential support? Well, I don't use magic numbers for support, specifically Fibonacci numbers. You're always near a Fibonacci number. They're ubiquitous. They're everywhere. I use actual trading between market participants, buying and selling, and looking at the conviction or lack thereof at a given point in time. The next area to keep an eye on, we're not too far above it in the SPX. It's down here. There's a gap here. I'm going to show you another view of this gap in a few minutes on a shorter term time frame that makes it clear. But we're not far from it. It's this 5381, 5342 area. Typically with this much momentum, you're going to see lower lows, even if we're going to suddenly V-bottom again and go ramping back higher. Could we retrace this entire structure? We could. It's not likely. It's very unlikely to do that prior to some sort of attempt at a substantial rally back towards this high. So this is the SPX. Let's look at the NDX. All right, the NDX, there is really nothing below Friday's low until you get down into the area of this buying tail, where this buying tail ended in here. Now, this is the low down here. You have a cluster of activity here that would be an area of interest if we do reach down into it. Back to the upside, incidentally, in all of the indices, it is Friday's high. If we were to turn around now next week, early next week, and close above Friday's high in all of the indices, that would be bullish. Okay, let's look at the Dow. Pardon me, I have a cold. So you can see the Dow closed right at that gap. This is Friday's high. Now these levels, again, are outlined on the website. Go to weekend reports. If you want to download a PDF and print it out, you can do that. It has the levels on it. The Russell. Here's the Russell. The Russell is in an elevator shaft. And again, there's really nothing in the Russell until you get down to here. That doesn't mean we don't stop on a dime in here somewhere. I'm just saying from an auction market perspective, this is the next identifiable level where there was significant, important activity between buyers and sellers. And then the New York Composite. Now, the New York Composite traded into an all-time high and made an inverted V top, which are very, very rare. It is truly in the middle of nowhere here. So that is the view of the indices from a price structure perspective. Let's take a look at some of the internals. Now, I follow very, very simple things as far as indicators are concerned. I don't use oscillators, which you see on my screen. The red is a 10-day moving average of NYSE advancing issues. The green is a 5-day moving average of advancing issues. And then below in the lower pane is breadth. It's a histogram of breadth. Breadth closed at negative 1478, which is a moderately extreme reading, moderately. Not particularly super extreme at all. Now, it would be really interesting if breadth continues to be weak and the 10-day and the 5-day moving average reach down to these lower extremes. If that happens, I will let you know, because it will be important to see where price is at that point in time if these moving averages of NYSE advancing issues get down into this extreme. I have never known a better actual sentiment indicator than this. Now, this is especially at lows. It trying to catch the divergences at highs is not nearly as effective as identifying lows. Okay. Now, another thing of interest from a technical perspective is VIX. Excuse me again. So you can see VIX. We've been in a bull trend. The market condition on the bigger term picture has been higher since last October. Okay, so almost a year now. And VIX has responded in that manner. Now, it's interesting, VIX has been hanging higher in here since we had this big spike down. Now we're having another excursion above 20. Is this marking a low, or are we on the cusp of seeing another big spike in volatility as the SPX and the other indices trade sharply lower? Now, if you look at this and trying to put the pieces together, and you can get in trouble doing this a little bit, but it's hard for me to envision what it would take to get the SPX to close below this low with VIX already this high. If it were to do that, we would have a rather dramatic situation similar to what we had in these 3 days back in early August. So I'm thinking that we're probably going to form at least a short-term low in here and make an attempt at a fairly significant rally back towards last week's highs before we get anything of significance to the downside. I will keep you updated. Again, I hope you guys have found value in this. If you did, please like and subscribe. Have a great weekend. I'll speak with you again soon.